curtain rises on yet another case of Wall Street's blindfolded bandits, and today we bring you one of the most perplexing failures to hit the financial world. Albemarle Corporation, 5 so-called experts, have taken the stage, each with their own version of the truth, each with their own glaring misstep. You'd think that with their fancy degrees and high salaries, they'd at least get the basics right. But no, instead, we are left with the aftermath of their incompetence, a trail of missed opportunities and poor calls that should make any investor shudder. What exactly went wrong? How could these analysts have been so blind to the potential of a company poised to dominate the lithium market? Could they have been swayed by ulterior motives, or was it just sheer negligence? Today, we drag them into our incompetence court to dissect their flawed logic. And trust me, it's going to be brutal. But as much as this is about calling out their failures, it's also about uncovering the real story behind Albemarle, a company that should be on your radar for all the right reasons. And here's the kicker. Today's deep dive isn't just about tearing apart the so-called experts. It's a lesson on how to avoid becoming their next victim. We'll explore the critical mistakes that led these analysts astray and arm you with the tools to see through the noise. Because if you're serious about investing, it's time to start thinking for yourself before you end up following the blind right off the cliff. And if you're looking for a side hustle to complement your investing journey, I've got something exciting to share. Making extra money these days can be tough, whether you're stuck in the 9-to-5 grind or just want an additional income stream. But what if there was a fun and effective way to start earning on the side? Enter Tube Magic by Matt Parr. This course will teach you how to create and optimize YouTube videos using AI tools, making the process easier and more profitable. Matt's course provides comprehensive training on using AI to streamline video creation, attract viewers, and monetize your content. Whether you're new to YouTube or looking to enhance your existing channel, Tube Magic offers all the strategies and insights you need to succeed. If you're serious about exploring a new income opportunity, check out Tube Magic today. Click the link in the description below to get started on your AI-powered YouTube journey. Don't wait. Your future self will thank you. Welcome to the Incompetence Court, where we hold analysts accountable for their blunders. Today, we're diving into the disastrous predictions of some so-called experts who completely missed the mark with Albemarle Corporation, ALB. These analysts' critical errors have not only misled investors, but also exposed a shocking level of incompetence in their evaluations. Accuracy in financial analysis is paramount. Yet, as you'll see, these analysts failed spectacularly. Their blunders highlight why it's crucial for investors to approach analyst recommendations with a healthy dose of skepticism. We'll scrutinize the mistakes made by today's analysts who should have known better. Their botched analyses have cost investors dearly, and we're here to dissect every misstep. And, as you might expect, we'll contrast their failures with the shining example of one particular analyst who managed to get it right. Our first defendant in the incompetence court, Alexey Yeframov, is being charged with gross incompetence. Yeframov's analysis was marked by significant misjudgments, especially in his handling of Albemarle Corporation. From June 2020, he maintained an underweight rating on the stock, failing to acknowledge the company's rising trajectory and strong market position. By May 2023, he switched to an overweight rating. But unfortunately for him, this bullish call was made after the stock had already peaked at an all-time high of 321.04 and was beginning its descent. His inability to adjust his stance in time left investors in a precarious situation, watching their investments plummet as the stock price dropped to its current level of 88.93. In essence, he was telling people to sell on the way up and to buy on the way down. At the height of ALB's peak, the stock was trading at a remarkable high, only for Yeframov to overlook the signals of an impending downturn. To make matters worse, his recommendations were completely out of sync with the market reality. While ALB surged, Yeframov was advising a sell, and as it began to decline, his suggestions to buy were misguided. As of now, ALB is trading around $94.06, and Yeframov's overweight rating remains a stark reminder of his flawed analysis. To recap, Yeframov was advising people to sell as the stock ascended and to buy as it began its decline, an approach that starkly exemplifies his analytical failings and disregard for the company's true potential. Guilty and sentenced to a life of manual number crunching at your nearest investment bank. Our next defendant in the incompetence court is Arun Viswanathan, whose track record with Albemarle Corporation is a masterclass in missing the mark. From the time he began his coverage in 2017, Viswanathan rated the stock as outperform, even as ALB began an initial descent. As the stock started to recover and gain momentum, he inexplicably switched his rating to underperform. This misstep came just as the stock began its climb towards its all-time high. Viswanathan remained bearish until October 2021, when he suddenly flipped back to outperform, just a few months before the stock peaked. Once again, his timing was off. ALB hit its peak and began a significant decline. Yet Viswanathan stubbornly held on to his outperform rating. The stock continued to crash, and despite all signs, he still maintains that bullish stance. The irony here is palpable. If you had done the exact opposite of his recommendations, you likely would have made some money. Instead, his miscalculations have left investors scratching their heads and counting their losses. Guilty as charged and sentenced to a lifetime of manually updating Excel spreadsheets for every lithium price fluctuation at the most junior analyst desk in an underperforming hedge fund. May your pivot tables always break. Our third defendant in the Incompetence court is Karin Blanchard, whose late entry into the Albemarle Corporation ALB saga was no less disastrous than those of her predecessors. Blanchard joined the party right around the stock's peak, a critical moment when accuracy was paramount. Yet she displayed the same level of incompetence that plagued the other analysts. Blanchard began her coverage with a series of bullish buy ratings just as ALB was poised to start its dramatic descent. She clung to this optimistic outlook for most of the way down, stubbornly maintaining her buy rating even as the stock plummeted. It wasn't until January 2024, long after the damage was done, that she finally downgraded her rating to hold, where she remains to this day. Her miscalculations and delayed adjustments could have severely misled investors, causing them to hold onto a losing position for far too long. Blanchard's analysis serves as yet another example of how poor timing and misplaced confidence can lead to costly mistakes in the world of investing. Guilty as charged and sentenced to 20 years of recalculating overvalued assets while waiting for the next lithium boom that never comes. Next up, we have Vincent, who stands out as the winner of our Competence Lottery of the Day award. In a field marred by misjudgments, Vincent's analysis of Albemarle Corporation ALB is a breath of fresh air. He began his coverage in 2021 and was underweight the entire time, demonstrating a consistently accurate and cautious approach, unlike his peers who stumbled along the way. At the stock's peak, Vincent's estimate of $155 was spot on, predicting the decline that others failed to foresee. Unlike our final defendant today, Callow, whose track record on Albemarle Corporation is, to put it mildly, a roller coaster of misjudgments, standing with charges of financial massacre. Callow began his coverage back in 2015 with an outperform rating and an estimate of $46, a seemingly sound call at the time. However, as the years progressed and Albemarle's growth potential became increasingly evident, Callow clung to his outperform stance, failing to adjust as the stock soared. Then came February 2022, just a few months shy of the stock's all-time peak, and Callow finally switched to a neutral rating. But his timing couldn't have been worse. Just as the stock began its sharp descent, Callow turned bullish again, issuing an outperform rating at a whopping $288 in May 2023, after the crash had already started. From there, he found himself chasing the stock price down, stubbornly maintaining a buy rating until recently, when he adopted a neutral, outperform stance at the depths of the trench. Callow's analysis not only led investors astray, but also demonstrated a lack of foresight and adaptability that ultimately cost his followers dearly. Guilty as charged and sentenced to a life of reading confusing stock charts in a windowless basement office, armed with nothing but a malfunctioning calculator and an outdated market report. As we've seen, the staggering missteps of our analysts have left a trail of confusion and loss for investors who trusted their guidance. Each one, in their own way, failed to grasp the true potential or the pitfalls of Albemarle Corporation, leading to a series of poorly timed and misguided recommendations. But why did they miss the mark so badly? To truly understand the depths of their incompetence, we need to dig into the company itself. Understanding Albemarle's background is crucial to recognizing the flaws in these analysts' assessments. As we explore the company's history, market position, and strategic moves, it will become clear why they faltered and what they overlooked that could have changed everything. Disclaimer: Incompetent capital is for entertainment purposes only. While we critique the missteps and mishaps of financial analysts, we acknowledge that they likely tried their hardest and simply made a bad judgment or two, or maybe 300. Our aim is to highlight the funnier side of investing and analysis, not to make personal attacks. Please note that we may sometimes add fictional elements to the storyline for entertainment purposes. And finally, remember that even the best professionals can miss the mark. So laugh away, but please avoid making personal judgments about the analysts we report on. Albemarle Corporation, founded in 1994, has grown into a powerhouse in the specialty chemicals industry, particularly known for its leadership in lithium production. This Charlotte-based company plays a crucial role in the global supply chain, supplying lithium, a key component in batteries for electric vehicles, electronics, and renewable energy storage. Over the years, Albemarle has strategically positioned itself at the forefront of the lithium market, making it a significant player as the world shifts towards sustainable energy. Key milestones in Albemarle's journey include its acquisition of Rockwood Holdings in 2015, which cemented its status as a leading lithium producer. Albemarle's continuous investment in expanding its lithium production capabilities, coupled with its strategic partnerships, has allowed the company to maintain a competitive edge in a rapidly evolving industry. These moves have not only solidified Albemarle's dominance in the lithium market, but also highlighted the importance of its role in the global transition to cleaner energy. Albemarle Corporation, a prominent player in the lithium industry, has been a key contributor to the global supply chain of critical materials used in electric vehicles and renewable energy storage. However, despite its strong market presence and pivotal role, the company's stock has faced severe devaluation, especially after reaching its peak. Several challenges have contributed to this decline. Firstly, Albemarle's stock soared to an all-time high of $321.04, driven by optimistic projections about lithium demand. As the company struggled with supply chain disruptions, including delays in expanding production facilities and difficulties. Additionally, market overreaction to short-term economic factors and geopolitical uncertainties played a significant role in the stock's volatility. For example, fluctuations in global trade policies, such as changes in tariffs on raw materials and export controls on critical minerals, impacted investor confidence. Tensions between major economic powers, like the US-China trade disputes, introduced uncertainty and led to erratic stock performance. Albemarle also faced increased competition and pricing pressures from other lithium producers, which eroded its market share and profitability. Stricter environmental regulations and policies aimed at reducing carbon emissions further compounded these challenges, impacting production costs and market dynamics. Despite these setbacks, Albemarle remains a critical player in the energy transition. The company's ongoing investments in technology and production capacity highlight its potential for future growth. However, understanding these challenges is crucial for recognizing why the stock experienced such dramatic devaluation and how the company's strategic responses will shape its recovery trajectory. Albemarle Corporation's financial performance provides a critical lens into its recent challenges and successes. As of the latest reports, the company has demonstrated substantial revenue growth, with a recent revenue figure reaching approximately $4.5 billion. Despite this growth, profit margins have faced fluctuations due to volatile lithium prices and increased operational costs. In recent quarters, Albemarle's profit margins have seen some compression, reflecting the pressures from both competitive pricing and higher production expenses. Having dissected the analytical blunders and the complex landscape surrounding Albemarle Corporation, we now pivot to a crucial aspect of investing: learning from these missteps. The failures of the analysts we've examined underscore a vital lesson for investors. Relying solely on analyst ratings without conducting your own due diligence can lead to significant financial setbacks. Understanding a company's fundamentals and market conditions is essential to making informed investment decisions. This transition into the lesson of the day will delve into how to avoid falling victim to misguided analysis and emphasize the importance of thorough research. The mistakes made by the analysts in their coverage of Albemarle Corporation highlight the critical need for investors to adopt a proactive and informed approach. Analysts can and do get it wrong, often due to a lack of insight, poor timing, or inadequate analysis. By examining these errors, we aim to equip you with the tools to steer clear of similar pitfalls. This lesson will focus on the importance of conducting comprehensive research, scrutinizing financial statements, understanding market trends, and not relying exclusively on external opinion. To safeguard your investments and make informed decisions, adhering to key investing principles is crucial. First and foremost, do your own research. Understanding the fundamentals of a company and its market environment is essential. Analysts can offer valuable insights, but they are not infallible. Relying solely on their opinions without digging into the data yourself can lead to poor investment choices. Secondly, focus on long-term potential. It's easy to get swayed by short-term fluctuations and market noise, but evaluating a company's strategic positioning and growth prospects over the long haul will give you a clearer picture of its true value. Another critical principle is to beware of herd mentality. Following the crowd can be tempting, but it often leads to suboptimal decisions. Make sure to critically evaluate the rationale behind popular opinions and not just follow them blindly. Lastly, understand the industry. Especially in sectors like lithium, where market dynamics are complex and evolving, having a solid grasp of industry-specific factors will help you make more informed judgments and recognize genuine opportunities versus fleeting trends. In reflecting on today's exploration, it's clear that critical thinking and independent analysis are paramount in investing. The analysts we scrutinized failed to deliver accurate recommendations, leaving many investors in challenging positions. Their incompetence underscores the necessity for investors to not solely rely on external advice, but to engage deeply with their investments and understand the broader market context. Revisiting our incompetence court highlights the severe repercussions of poor judgments. Analysts who missed the mark not only misled their followers, but also failed to uphold the standards expected of their profession. Holding these analysts accountable is crucial to ensuring better, more informed decision-making in the future. As you navigate your investment journey, take these lessons to heart. Empower yourself with knowledge and apply the principles discussed today. By doing so, you can avoid the mistakes made by others and steer your investments toward more promising outcomes. Remember, with the right approach and mindset, you have the tools to excel and make informed decisions that align with your financial goals. So, as you move forward, keep these insights in mind and remain vigilant. The path to successful investing is paved with informed choices and a proactive attitude. Stay curious.